Hello and welcome to Commodity Champions. I'm Manisha Gupta. The start of the Russia-Ukraine conflict disrupted the price of food staples, sending them rocketing to multi-month highs. The recent aggravation of the conflict has only made matters worse, with experts fearing that Russia could seize trade at the Black Sea port. These fears in the midst of the drought that's gripped Europe has hurt supply of staples as demand continues to grow world over. Prices of staples like wheat are currently at 14-week highs, while corn prices are trading at 3-month highs. The edible oil space has also seen a spike in prices as demand from China and Malaysian exports rises. Supply is equally strained back home, with excess rains in the month of October hitting India's crop yield. So how much further will the prices of staple foods rise, and can the government do anything to stem this spike? Also, how is the festival season looking like? To discuss that and more, I'm now joined by Dorab Mistry, he's director at Godrej International. Mr. Mistry, hi. The Indian government put out a table where we see various commodity prices declining between 2 to 8% for the month of September. How have you seen the last month when you see the food inflation, and is October a bit of a concern right now?
I think the Indian government report is absolutely right. Commodity prices have peaked, and they have peaked over the last 2-3 months, not necessarily only in the last 1 month. But everything has been thrown into haywire, or the waters have been muddied by this latest cut in OPEC's production profile. This is a mischievous cut. I call it OPEC's badmashi, because they had no reason to tighten the screws on the world economy and to drive the developing world into recession by this cut and by trying to push up prices. This is a political cut meant to throw mud at the Democrats in the upcoming midterm elections in USA. And it's a very unholy alliance between two very unlikely bedfellows, Saudi Arabia and the Russians. Now we have to watch and see whether this cut leads to higher prices. It has led to some higher prices. Crude oil has gone up by almost 10% in the last 1 week. So I would say that the Indian government's prognosis on inflation is quite correct. Worldwide, commodity prices are coming down. Of course, the dollar has become stronger, but the dollar will peak at some stage in the very near future. So the outlook for prices generally is very good for consumers. It is very good for the economy. But these little missiles that keep throwing into the world economy by despots and all sorts of dictators sometimes muddy the waters for a short period of time.
Well, that point is well taken, but you mentioned about the dollar, and the rupee has been hitting record lows much part of this week. Is there a pinpoint, is that a pain point rather, or do you think it won't last for too long?
Not for too long. And remember that when the rupee weakens, our exports receive a very good boost. But the boost and the reaction of greater exports is always delayed. It takes 3 to 6 months for exports to pick up. Whereas the impact of the weak rupee on inflation is almost immediate, because you have to pay for your imports immediately. So I am not too bothered, frankly. I've been saying it for the last several months that I don't lose sleep over the slight weakening of the rupee. It is actually good for growth and good for India's exports. But we will see the effect of that in 3 to 6 months' time.
Okay, let's talk about the palm prices then. And you've been kind of bearish in them, and we've seen prices come off its highs as well. What's your sense now? How do you look at the rest of this week when you look at palm prices?
Well, you know, Manisha, I've been bearish on palm prices since the month of June, if you take the latest. And as long back as March prices were at a peak of 7,500 ringgits. And I made a forecast that they would be down to 4,000 by September, or rather by June, and then 3,000 by September. And we almost got to 3,000 by the end of September. So I am bearish. You cannot have rising commodity prices when the economic macros in the world are looking so grim, and we are on the threshold of recession. in most of the developed world. In fact, some of the developed countries like the United States are already in recession. Parts of Europe are already in recession. So you cannot keep pushing up commodity prices, and which is why I think that this cut in production by OPEC is a political harebrained idea, which I hope will bomb and will not succeed. So I remain fairly sanguine on commodity prices on the downside. I think they will keep gradually deteriorating. And on palm oil in particular, I am on record as having said that prices will go to 3,000 by the end of September and 2,500 ringgits by the end of December. And I see no reason to change my forecast just because OPEC has cut its production slightly and given a spike to crude oil prices. As you know, crude oil and palm oil now more or less work in tandem because of the pivot of biodiesel. And there are reports that there could be better biodiesel demand, etc. But I don't see any reason to change my forecast. The one point where I have been slightly wrong has been my estimate of India's imports. I think India has found palm oil cheap relative to other oils, and our imports have surprised me on the upside. My feeling is that Indian stocks by the end of October are going to be at a record level, stocks of palm oil. And Indian importers have gone overboard. Many of them are now sitting on huge losses because they bought at high prices. But processing margins are good, offtake is good. Basically, the Indian economy is doing quite well. And as a result of that, India's imports have surprised me on the upside.
All right. But I get your point when you say that the palm oil prices from here on will continue to decline. And that's good for the festivities because there's a lot of buying that will happen. So while the consumer side is sorted, would you say that the farmers may have something to fret about given the fact that you will see arrivals coming in very soon?
You are absolutely right. Good question. Generally, it is a fine balance that the government has to maintain between low or reasonable prices for urban consumers and remunerative prices for farmers and rural India. So I think the government now needs to monitor prices very accurately, very actively, because there is a danger that prices will fall too far. And while the MSP on soybeans or on grains may not be threatened, the farmers will not actually make money the way they made money last year. And if farmers do not make money, they will not plant more oilseeds next year. And India's agricultural productivity is so low, our production in many areas, particularly oilseeds, is not keeping pace. We need to pay our farmers better. So I think the government has to do two things. It should be ready with legislation or notifications to put up small amounts of import duty. This blanket declaration that there will be no change in import duty up to 31st March is like writing a blank check for the exporters of palm oil in Indonesia and Malaysia. Indian government should not have done that. They should always keep their cards close to their chest and reserve the right to protect the Indian farmer if required. And the second thing that India needs to do is to ensure that the MSPs are properly implemented and give farmers and merchants a hedging instrument. That means reopen the futures markets. Futures markets, there is no reason. There was good reason at one time to shut them down, but there is no reason anymore to keep them shut down. Let's open them up. Let's create business. Let's give hedging instruments to our rural economy and ensure that we do, or our farmers, our merchants have the same instruments available as their counterparts in other parts of the world.
Well, yes, absolutely. After the festival season is over, the government perhaps may have to take a note yet again on the current policies. But I take your point that the edible oil prices are not rising, and this is clearly a time for consumers with the festivities on. Mr. Mistry, thank you so much as always for joining us. It's time for a break now, but when we return, we shift focus to rising prices of pulses and India's sugar sector in a chat with Mr. Bimal Kothari of India Pulses Association and Mr. Praful Vitlani of the All India Sugar Trade Association.